Welcome traders to the 2023 Impact Trading Services Gold Analysis Signal Service. You come over to our YouTube channel, Impact Trading Services. Come over to the Impact Trading Services Gold Analysis and Signal Service to view the playlist. So our starting first signal in January 2023 came here. At the 1850 area. On the chart, January 2023. Now here's what we do. Here's how we plot our signals. This is every week. We will come to the monthly chart. And then we will plot our areas of monthly supply and demand, support and resistance. So we're starting for January. This is January. Tuesday, January 3rd, first trading day. All right, let's see what we have here. And then what we will also do is we'll go to the weekly to see what agrees with these areas. There's a lot of weekly agreement in our areas of supply demand, support resistance. All right, so during the trading day, what we want to do is look at these areas and see what areas will work as supply, demand, support, resistance. We know we are in an uptrend. So position traders are looking for the swing to continue up. Swing traders are looking for the swing to continue up. We have a swing of roughly right now. That's 7,000. So you would be looking for price to retrace. So as the trading day starts, we want to look in these areas to see whenever we get confirmation, signal confirmation. 2023 started the agent session. What we are believing is between the area of 1840 here, between the area of 1840 and 1850, we'll probably see a retrace. So we've already marked our levels, and now we are going to see how the trading day begins. Okay, so our first signal came at the 1850 area. Now you see we had already had these two levels marked on the chart. We know by data that when price enters into these monthly areas of support and resistance, supply and demand, at the institutional levels of 5 zeros and 0 zeros, gold has retraced at least 1,000 pips. This is the first time in the month that price has went up into these areas, and now price retraced 2,000 pips. Price came up into the area of our predetermined area, and then price retraced 2,000 pips. You would have placed your trade in this area, and then you would have placed your stop loss just outside of this area. Now when you enter on the 3, 5, and 15 minute for intraday traders, then you see you have very clean entries from these two levels that we drew before price entered into the area. We drew these levels on Saturday or Sunday when we were planning the trading day for Monday and Tuesday. We were patient. We waited until price came into the areas, and then we placed our trades based on predetermined supply and demand and support resistance areas. And then we placed very profitable trades. This trade moved 1,000 pips down to at least 1,000 pips down. That's 2,000 pips down. And then the trade moved 2,000 pips up. 2,000 pips down, 2,000 pips up. So now you know the level, you know there's orders in the market. This is a double top. There were orders in the market that must be filled. So price had to move up into liquidity to fill all of these orders. Price moved back down into liquidity to fill all of these orders, and then price moved up. So we knew that the first time back in the month that price was going to retrace because price entered into an institutional buy, sell, support, resistance order block. This was a supply order block where there were a lot of institutional orders to sell. And then support became resistance. And then as you continue to train your eyes, we see a pattern here that has broken. So this pattern here is a triangle pattern that happens every month on the charts. Every month on the charts. So you see this triangle pattern here. You had a breakout here, breakout of a monthly high, then price entered into a monthly support, resistance, supply demand area. So this would be monthly supply and resistance. Price did not move above, so that's resistance. Price did not move above. Entered into a supply area, and then came down and retested. So that is a classic breakout of the trade. Classic breakout. So you have your breakout here, and then you have your retest. Price came down. Then you have a retest, and then support becomes resistance. Resistance becomes support. This was resistance here, resistance here. You have a breakout of resistance, and then now resistance has become support. Price came up here, resisted here, false breakout here, true breakout, 2,000 pips here, and then now you have support. How do we know price was going to retrace at least 1,000 pips? Because we study our charts on a daily, monthly, weekly basis. We will use May 2022 as an example. The first time price entered into this area of demand, what did price do? The first time price entered into this monthly area of demand that was already there from February, in the month of May, price entered down into this area of demand right here. And then what did price do? Price retraced 5,000 pips. You would have placed a trade in this area if you are a position trader or a swing trader. This would have been your swing trade for 5,000 pips. A position trader would have seen this trend. A position trader would have known to take profit here and look to get in with the trend here to here, back down to continue the downtrend. And then your intraday trades, you would have placed trades during the Asian, New York, or London session for longs here for at least a 1,000 pip gain. All right, traders, first trade signal in January 2023 came on Tuesday, January 3rd at the 1850 level. You could have traded 1850 down to 1830, 1820. We will see you in the next trading video.